Well, I think the stock market is going down because it was in need of a correction. I don't think it's panicking because of the debt ceiling or the Washington shutdown, although a resolution to that phony crisis may be the catalyst for the end of the correction, but that doesn't mean it caused it. But the real threat is the debt, not the ceiling. The main thing that stands between America and more debt is that debt ceiling, and that's why the president wants to raise it. It's because he doesn't want to actually pay any of our bills. He wants to continue to borrow money instead of paying the bills, and yet he's pretending that raising the debt ceiling is the fiscally responsible thing to do when it's the most reckless thing to do.
Kenny Polcari, let me kick this off with you here in terms of the market reaction. Right. We heard the president talk for more than an hour. Right. The market was steady, and then 10 minutes before the close, big sell-off here. So, what happened at the close, Kenny?
Well, yeah, I think it's a realization that this gridlock in Washington is going to persist, and so therefore the market needs to reprice. And Peter did say, the correction may have needed to happen, but it's really happening as a result of the dysfunction taking place in Washington. Not necessarily so economic, although we are entering earnings season. Any minute now we're going to get Alcoa out, and it's going to launch the earnings season. And I think what people are going to really want to pay attention to is what are these CEOs now going to say about this situation in Washington? If this persists, what's it going to mean 6 months down the line, 3 months down the line, the next quarter? And so the investors are going to start to get kind of anxious about that, which is why you see kind of the market repricing.
Right. And by the way, we're waiting on Alcoa earnings. As soon as those numbers come out, we'll have them for you. Then we'll talk to Klaus Kleinfeld, CEO, find out what he saw in the last 3-month period. But Courtney Reagan, let me get your take on where we are. Earnings expectations now down to growth of about 3%. We're still waiting on some revenue growth to show us that, in fact, we are seeing some stability here. Right. But let's not forget the government's shut down, so we don't have the economic data to actually give us a window into all of that.
Exactly, and so perhaps we're going to be paying even more attention to the CEO commentary, reading between the lines of the revenue growth, hoping that there will be some, because we don't have that broader read right now, at least for a period of time, from the government about what's going on in the business community, with the lending, with consumers, how they're feeling, how they're spending, any of that. Earnings season is important, but it is somewhat shifted to the side right now because of what's going on in Washington. I think the markets tried to slip off the gridlock for a while, but now we've really had to pay attention to it, especially as this new deadline looms. It's not a deadline that just came out of nowhere. We know that it's been coming for some time, but right now it's feeling very frustrating, I think, for traders and investors to try to take the appropriate positions while they're waiting for these politicians to fight back and forth and come up with these dueling press conferences.